Hey everyone, I've got with me today a very special guest. His name is Brett Fogle. He has 20 years of experience in trading and investing. He actually bought his first Bitcoin at $20, and which for a lot of you people would just love to be able to go back and do that, right? And he has made millions over the years in both stocks and crypto. He's done very, very well, whether it's a bear market like we happen to be in now during the time that we're recording this, and whether or not we're in a bull market. So he's got strategies to share with you that work, whether the market's going up or whether it's going down. And I think that's going to be quite important for today's video. So without further ado, though, I want to introduce you guys to Brett. Welcome along.
Hey, thanks, Mark. Great to be here.
Great to have you here. So Brett, off camera, you were talking about how this year, and it's been a tricky year, with a lot of stuff going on, whether it be the lunar collapse, whether it be FTX's collapse, and other things happening. It's been a tricky year, and you said that you've managed to get all of your calls pretty much spot on this year. Would you mind just sharing some light on that and what your strategy has been and why it's done so well for you and what people can learn from that so that they can do well going into the future?
Sure, I'd be happy to. And if we want, we can pull up some charts here. But
That'd
as you
be
said, I've
great.
been trading for 20 years, and I can
Yeah.
we can hold off on that for now. But from stocks and options and forex back in the day, crypto I went full in last year. I was trading and dabbling in 2018 after the 2017 correction, and it was tricky back then. The story, just a quick story on the $20 Bitcoin. I had driven up to a venture fast pitch in Orlando to pitch for some revenue for a software company. I had got there late and wound up missing the meeting, but I met the founder of BitPay, who had just raised. He pitched and raised his first 2 million for that. They're now the leading. One of the leading payment providers that accepts Bitcoin. But so he was explaining to me what a Bitcoin was. And because I said, "What's a Bitcoin?" He agreed to meet me for for drinks and appetizers at a restaurant the following week. And so the story is, he said, "Give me $20." I handed him a $20 bill and handed him my phone, and somehow he sent me a Bitcoin. On the understanding, though, however, that I had to spend the Bitcoin on the appetizers and the happy
Oh,
hours. So I
really?
call it my $20,000 happy hour, and at one
Wow.
point was only $64,000 happy hour. But so that was early exposure, and in a lot of ways, I didn't pay attention to as closely as I should have, as a lot of us probably have that story. But at any rate, here we are now, and I think there's one of the biggest opportunities coming along soon, really, to get into crypto now that all of once all this bloodbath finalizes after FTX and everything else you mentioned.
Right. Okay. So, um, what have you done? What's been your strategy that's helped you do really well this particular year?
Okay. Yeah. Well, back in November, I was advising people to get out of these markets. And part of that was Spidey sense. Part of that was a sort of a secret indicator we use. But regardless, by January, rather, it was clear to me based on an indicator that anyone can use. I'm mostly a technical trader, and my people that know me, I hear me say all the time, "Show me the charts, I'll tell you the news," because the news tends to be sort of factored in, and you can see it in the charts. So by January, it was clear to me we were heading lower. And at one point, I actually publicly put out there on Facebook that we'll bounce down to 22,000, up to 32,000, then to 16,500. Some people laughed, but it actually, where we are and have been for weeks now, is 16,500. Part of what I see are, and we can show that, but sometimes, a lot of times, is a simple technical analysis. Many times people get confused or get too far into the advanced technicals and Fibonacci's and things. You really don't need to. Mostly I'm looking at the 50 and 100-month moving average, prior cycle highs and lows. And we actually have some unique indicators we've created by a partner of mine who's a quant engineer and a trader. But the simple stuff, a lot of times that's all you need to pay attention to.
Yeah, it's interesting. I find people looking at prior cycles, highs and lows. I think that definitely does play a big part, because whether you like it or not, other people are trading and buying based on what they see there. At least more experienced people are. So whether it predicts a bottom or a top, it will definitely predict local bottoms and local tops, which can make a huge difference. Like, it will definitely play a part, because there's no way that people are going to see something happen 3 times in a row and then not go and buy on that signal. Even if it doesn't ultimately predict the bottom or the top, it definitely plays a part. What are your thoughts though on the fact that Bitcoin has never been in a recession, or it's never been in an environment where the Fed is raising rates at such a huge rate? So, per quarter, or per meeting. So, because also, like, you can look and say that the top of the RSI and the lower of the RSI has been trending downwards as well. So theoretically, the bottom should be lower this time relative to the last time's bottom. What are your thoughts on that?
Yeah, great questions. And, at the end of the day, you can certainly look at the RSI, the comment on the recession. Bitcoin's never been through a recession. It sort of came out of the same time as the 2008, 2009 financial crisis, and really wasn't mature enough to be considered an asset class till a couple of years later. So that was one of the reasons I thought certainly we would head much lower. And, people were talking about the everything bubble. For a while, Bitcoin was tracking the NASDAQ and S&P and sort of being treated like a tech stock. I think that, less so now. But at the end of the day, and again, we can look at some charts. The last 2 market cycles, we've gone down 85% from high to low. And if that were to happen this time, we're currently down only around, I'd say 72%. But to go down 85% would put us right around that $10,000 mark. And so a couple of reasons why I think we're going lower, and can share some kind of exact levels that I think we'll see. But in terms of why, it's just, again, part of it, spidey sense, and doing this a long time, didn't know which platforms would go down, but certainly once Luna and UST collapsed, just felt that there was another shoe to drop. Didn't anticipate FTX, but of course at this point, it's clear why that happened. And there's a few other ones that we're sort of waiting to see what will happen with those. Grayscale and MicroStrategy. I think MicroStrategy will be fine. It's Grayscale is kind of a bigger concern, and then any of the unknowns that could still drop. But I'm a believer, let's get it out of the way. The bottom is usually after a big major capitulation. And in the life cycle of investor emotions, it's when people are at that despondency and depression level. And so we're close, but I don't think we're there yet. I think we could see that in December and put the bottom in then, and then see a couple months of grinding higher before things start to kind of, head up again. But by no mistake, the FTX and recent news is it's going to delay things. Just bottom line, the institutions and sovereign wealth funds, pension funds really can't come into this market until there's meaningful regulation. And so that'll slow things down a bit. However, when that happens, and there's certainly a lot more reasons now for regulation, when that happens, there's trillions of dollars on the sidelines ready to come in. So while this has been a bumpy ride, I think in the long run, it'll be great for investors that kind of have that fortitude and patience to get in soon and hold. So,
well, yeah, I think that regulation, a lot of people don't understand it though. A lot of people watching will say, regulation, that's scary, that's going to send the price down. I think it's worth pointing out that if you're, let's say, a holder of trillions of dollars worth of clients' funds, you're a major brokerage firm or something, right? And you want to invest a portion of those funds into crypto. The thing is, you need certainty. You need certainty. You need to be able to go, right, okay, if we're going to put some funds over into here, we need to be able to know exactly, is it backed? Like, let's say I was to buy USDT, say, so that I can trade and buy crypto. Well, the fact is, you want to know exactly, you want the regulation in there so you can see exactly what their reserves are day in, day out. and then you're more likely to buy it. Same goes for every other currency on that market, or if any money is going to go onto an exchange and not even in your own wallet because you needed it on there so you can leverage, but not leverage, so you can long and short and stuff like that. It's very hard to do that without seeing the proof of reserves, because otherwise something like FTX can happen where you find out that they don't have what they say they have, and then you're in a lot of trouble. But if the regulation had been there before FTX, then you would have seen all proof of reserves. Places like FTX would never have existed, and it's just I guess a factor of the infancy that crypto is in. So what are your thoughts on all of that? Like, do you have any more to add to that?
Yeah, for sure. I think there's a lot of, fear and FUD around regulation that it's going to be bad for crypto. I think I would argue nothing could be worse than what we've seen happen. And a lot of that came from offshore companies that were not only unregulated, but unaudited. FTX was a house of cards. It was waiting to come down, floating their FTT token back and forth between Alameda and essentially inflating it back and forth. And so, we need to be aware of the companies that are unaudited. And so, there are still some out there. I think that Binance allegedly is well capitalized with 70 billion. They seem okay. CZ, the founder, seems like a reputable founder. And the US exchanges like Coinbase, of course, are audited. So I think that's important to note. And as you said, these other companies, they just can't take that risk of their clients' money and put it into something like crypto without some certainty. And that's so important,
because that could bring their whole company down if they end up making dodgy investments and stuff like that. They are people putting their retirement money into those companies in order to be safe. The moment that safety is questioned, their companies are no longer the leading players in that market. People want safety even over at the expense of higher profits.
And it's their fiduciary responsibility to make sure that doesn't happen. So if something were to go wrong and they hadn't invested in a regulated or audited company, they're technically liable. So that's a big part of where we are. And the other side of the coin is mass adoption. We are still in the infancy, and a lot of these projects that seemed so good last year and still have a lot of future utility, they're just in their infancy as well. I have a couple favorites we can talk about, but they're all down 80, 85, 90%. But similar to the internet bubble, Amazon was down 80, 90% a few times in its life cycle. And so a lot of these will take time to build mass adoption and really find that revenue model. I do look for projects that are either VC backed and or have a profit model and a way to make money. It's usually good for paying the bills. And so a lot of these that may not survive the cycle are just or technically vaporware or don't have a revenue model and may not be big enough to figure that out. Google was somewhat lucky in that it was adopted quickly, and then they figured out how to make money later. And in retrospect, it makes total sense, but it's really hard to see at this point where we are, what the future leaders will be. Again, I have a few favorites but you don't know. I will say that oftentimes you can see them first in the technicals without needing a lot of fancy technical analysis. I mean, happy to show a few of the. I've got screens all around me, so if you see me looking around,
I
I've
don't
got
mind
some charts over
you
here.
sharing your screen if you need to do so as well.
Okay, well, good.
Yeah, I think like one thing that we've all got different things that we spot. One thing that I spotted that's helped me with shorting the market in recent times, and I'm not suggesting people short the market, but it's just something that I spotted, was a lot of cryptocurrencies had major inflation issues that people didn't really realize, because they would look at the maximum supply of that coin, they'd look at how much had been issued and say, oh, there's not much inflation. But technically, there is major inflation problems if it's largely owned by a very small number of players who can start selling whenever they want to. So they release coins that if they're not selling it, the price kind of goes up. But if they start releasing those onto the market, even though they're technically within the already issued supply, it is actually inflation, and that it's now out there more than it was, if that makes sense. Like if everyone's holding and no one's selling the damn stuff, it goes up. But so it's sort of a little bit artificial. and then secondly, the inflation in terms of the all these little tokens that were going on these exchanges. Like I was noticing, like on Avalanche and on Phantom and stuff like that. I was like, wait a minute, some of those tokens are just, they're a way of almost, they're paying out in that token, then people are exchanging that token back into Avalanche, like, or whatever. It's actually kind of a way of inflating Avalanche with a pseudo Avalanche token that's not Avalanche. Same with Phantom, same with or any that had a lot of DeFi on it. And this is decentralized finance, which is supposed to be the good stuff, but when it's paid out in a coin that's kind of printed, it's there's issues, and all of those ones had the major crashes. That's what I was sort of shorting on, looking at those sort of ones, especially Harmony One. For me, I got to know that coin a bit through a couple of projects that I like, but I was looking at Harmony One itself that they were hosted on, and was like, there's issues there. Do you look that deeply into it, or you basically look at more, a lot of the technicals kind of show up the stuff anyway without having to know the specifics of why it happened?
And that's a great question and comment, because again, I'm a firm believer that show me the charts, I'll tell you the news. And again, I've been trading for a long time. There are, especially with crypto, it's a global market, and I don't proclaim to be the smartest or do the most research. I have a pretty good handle on and my finger on the pulse. But if things are going to move, it's going to typically be a well-researched team at a fund or investment bank, and they're going to start putting their capital to work. So I set a lot of alerts on charts, and I love Harmony One. At some point it'll come back. A Phantom coin we recommended last January before it went up 18,525%. It's back down now, but
I must say I've made a lot on the way up with Phantom. It
yeah,
also made it on the way down. Like
great. Yeah,
definitely it's set up to go well in a bull run, and not just the way the fundamentals are. It's not set up to go well in a bear market.
sure. There's some fairly simple patterns to look for, though, that I think everyone can learn. If you're watching and you're kind of intimidated by technical analysis, it's a lot of the simpler things are the best. And so, that's why I tend to spend more time on that, and certainly do use some of the more advanced things and when I need to. But if you'd like, I think the screen sharing is not turned on, but I'm
I
happy
needed
to.
to just, sorry, I'll make it
Sure, no
make it so
problem.
that you
And
can do that. Yep, that'll be awesome. Thank
okay.
you. Yep, you
Well,
should be able to do it
let's
now.
see. Let me know if you can see a chart here.
Yes, I can. Perfect.
Okay. All right, great. Well, and if you have any specific questions, feel free to chime in. What I thought we'd do is I would just give you a quick idea and look over what I look for. And I actually do a weekly video for a friend's YouTube channel. I don't need to mention that, but this is something that we go through on a regular basis.
Awesome.
So here's a monthly chart of Bitcoin. And as you can see, and by the way, my screen's over here, so I'll be looking over this way. This is the monthly chart in the past 3 market cycles. So if we go back to 2014 and 15, of course, we saw the peak here around $1,200. And if you remember back then, I remember back in those days when it ran up to 1,200 and then it came back to around 1,000, and people were like, "Oh my God, it's never going to come back." But I think while history doesn't repeat itself, it does sort of repeat similar cycles. Some people say that it rhymes, but in this case, it was 85% down from the peak to the actual bottom. And what is also similar, which we'll talk about, is where things actually bottom versus where initially it looks like we would. Here in the 2017-18. The market cycle came down from the high of around 20,000 down here, and again 84.50%, give or take. And in either of these cases, it came right down to the 50-month moving average. This is this blue line here. So again, I think simple indicators. And so with that, we had the high here recently back in November of 21, when I was telling people close to me, this is time to get into cash, and for various reasons. And so we've come down so far here. Let's just take a look from that high, currently at about 75%. So if we were to come down the full 85%, that would put us around 10,000. Now, 10,000 is a psychological level here which I think is possible, but there's a few levels within here I think are more probable for now. What does concern me is this current candle here, and I'll just zoom out a bit. Let me just hit this different button there. Okay. And if you guys know anything about candlesticks, this big red one here is a bearish engulfing candle.
Yes. Yeah.
And that's looking fairly ominous. On the opposite side, the bullish engulfing back here, it typically means it's going to continue in that direction. So we had a big bullish engulfing candle here, went up. Another one here, went up here, and of course went up here, went up. The bearish side had one back here in April. Of course, we've dropped back down below here. We had a bearish engulfing candle here in August, and of course, we've come down lower. And right
just
here,
to repeat for people watching, an engulfing candle was where the high and the low are above and below, not counting the wicks. The high and the low are both greater than the period before. So it completely
and that's
swamps it. Yeah.
Yeah, and if you just imagine without the wicks, as you said, if it engulfs the prior, then for the most part, it should head lower. Now, here's something I'll teach everyone, and if you're advanced or beginner, this is an interesting thing that I picked up on a long time ago that most people don't share. And the reason I thought we'd come down to 16.5, which is where we are, is that if you go back here, these large candlesticks, this large up move here, and some people call it a vector candle. We don't really need to go into that. But generally, these big moves will at least have their midpoint retested. And so while we are up here, I was eyeing this level here because it was the midpoint of this move up here. It was also at one point the 300-week moving average, exponential moving average. So we'll jump over to a weekly. And so we're holding right on that, which is interesting, but I think it's short-lived. I think the next level down that we'll head to is 14,000 or possibly just below that, because that was the high back in June of 2019, which also was the high of October 20, where this flipped as resistance to support. So this 14,000 level, just under it, right around there is our next level of support. And below that, I'm eyeing the 100-month moving average, this green line, which puts us around 12.5. So these are the levels I'm watching now, and we can talk a little bit about ways to trade this, because nobody knows. I don't know. My friends have called me Cryptodamus in the past, which I think is funny, but of course nobody really knows. There is, however, a simple strategy to employ if you believe, as I do, we're near a bottom, and the proper way to do that is really dollar cost averaging. But if I could just open this up a little bit, we'll look at a couple things here. The MACD, I don't use this. I'm sorry, I think I actually had turned. This is the stochastics RSI. Somehow the MACD got turned off, but I think it's worth pulling that up here. And again, if you're new to all this, don't need to panic about all these weird lines on here. It's pretty simple. But one of the reasons I was saying get out of this market in January is simply the MACD was crossing over right here in January. I had thought we would head lower in November, but this crossover, blue over red, this was the indication, in us going green to red here, this is going lower. So it's encouraging. This red area is starting to level out. I do think it'll take some time and be a few months into the beginning of next year.
You can see it happening even earlier in 2019. It happened before, the downturn there as well, as you can see, and then it crossed back the other way, was a signal of things starting to, get into accumulation phase again.
Yeah. So again, a lot of this is not always that difficult. I think that's all I wanted to touch on here on a monthly. If we jump over to the weekly, this is also, so I've drawn some accumulation zones where, and there's a report I'm working on that kind of talks about the Wyckoff patterns, and there's certain patterns over the last 100 years where in the stock market, the big banks would accumulate and build large positions, and then they would push the price up, and as the retail traders came piling in, they would be selling or distributing. We've certainly seen those patterns in Bitcoin last year, and of course everything in hindsight is 2020. But so with that in mind, I think there's
bearing in mind for people watching, as soon as this report is ready, I will put it in the link in the description below. But at the time of releasing this video, this report may not be ready. I'm not sure, but Brett said it's not far away, and then I'll put it in there once he's got it for me.
Great. Yeah, it's really interesting. And there's also some things in the report that are fascinating in terms of where we are on the regression channel. It's a fancy way of saying where we are in the scheme of things, where Bitcoin has traditionally bottomed. And so that fits in line with what I'm suggesting here. That is, I think we're close, but not there yet. And there's some other things I'm watching. But for now, this strategy of dollar cost averaging, or DCA, over time tends to be one of the better strategies. If you're putting a set amount of money in weekly, averaged over time, it can give you the best overall price. Unfortunately, what most people do, and even some of the big institutions, or Michael Saylor, and when things are really running high, the FOMO is fear of missing out. So people were buying in these regions up here close to the top, and then this is really not where you want to be buying. This is a distribution zone where, as we can see, again, everything in hindsight, but this is where the big money players and whales were distributing. So in that regard, I would put that as, let's just make this box red. So the old adage of, buy low, sell high, it sounds great, but it's not always easy. We've identified some methods that are working well for us, so that are giving us a bit of an edge there. But for now, so if we just to touch on those levels I was talking about, this first accumulation zone would have been a reasonable place to start buying. This black line here is, I'll just pull that up again, the 300-week moving average. And previous to that, the 200-week moving average had held until it didn't. And so below this, and now with the big news last week, we're down into another accumulation zone. Let's just call it between 14,000 that I mentioned, all the way up into this 18,000 range, give or take. I think this black line will sort of become a resistance area. So, and I know it may be a little bit much to see.
Can I also mention, just from a news perspective, and you said this before, but I'll just reiterate it to people watching. Usually macro things can bring a market to halfway, three-quarter way. They don't bring it the whole way, and that's why you talk about looking for a major capitulation, like a Lehman Brothers event. If FTX was a Lehman Brothers event, then there's a high chance that is will cause the bottom, but it can take time for that contagion to play out. So you may find that one big domino falls, but then a whole lot of other dominoes have to collapse, and then you've flushed out everything. All of the weak hands, you've flushed out all of the scams, you've flushed out all of the just a lot of the dodginess, I guess, that's gone on to achieve the overinflated prices. And now you probably get to a point where you're below where it should be, and then you start accumulating and moving up again into the next market cycle.
Yeah, and that's exactly right. The markets go up when the sellers have exhausted. And so you would think that most of the sellers are gone. I think most of them are out of the markets, but with new information means new decision. So if we have another big explosion, there are a couple that could still be in trouble. And I've outlined those in this report. So certainly, and I'm in the middle of that, coming along nicely. So it'd be great if you want to share that with people. We'll read about that. We'll cover those different options. These are just two squiggly lines here, and actually of possible scenarios. So if we want to just clean this up a bit, I've got two versions of it here. Just basically, from now we could either continue dropping, bounce off this 14,000 level, then go down lower and then higher. That's one possibility. Or push higher here first and then drop and bounce. And these markets, everything cycles. So I think one of the biggest takeaways is to get rid of the idea of just buy at the bottom and hold it all the way up. This run higher was unusual, and this is usually the hallmark of the end of the bull market. And so the question then becomes, where do we have an advantage? Swing trading has always given the individual investor the biggest advantage. And the reason why, by the way, swing trade is where you might invest and hold for a few days to a few weeks to a few months, and then take profits at certain levels that you believe it will kind of pull back in. And so the reason that it's harder, we have an advantage there, is it's much harder for the bigger players to do that. They have more money to play with, so they're kind of forced to do this, big accumulation along here, big distributions along there. And that's where usually the retail people, and I'm sorry, retail investors is you and I, the little individual investors, and little,
Yeah, I think people should also bear in mind this is Bitcoin we're talking about. Not every altcoin necessarily survives, because part of the reason sometimes that the next dip occurs may be an altcoin that ends up crashing, and hence, of course, it pulls Bitcoin down with it to a degree, because it'll be in so many liquidity pools that automatically try to save the altcoin by selling more Bitcoin, to try and level them out. But you get all this automatic selling of Bitcoin, not by people choosing to sell it, just auto sells. So it goes down very fast. But then the real people that are actually got buy orders willing to buy, they buy it back up. And hence you get this dip down, this big wick and this big bounce. But that's with Bitcoin, but the altcoin may not come back. That's, like Luna as an example. So,
yeah.
You got to be careful about your altcoins if you during these times, especially because it's not the exact same thing. Even though a lot of altcoins fly up when Bitcoin flies up, they don't all survive on the way down.
Yeah, that's a good point, because altcoins can have 100x returns sometimes, but they also are more reactive toward the money flowing out of the markets. And so, what I was just going to do here is pull up this image that you guys may have seen before. That is the sort of cycle of investor emotions. And so, let me just open this in a new tab so we get rid of some of the noise. But basically, the point of this is that where people generally buy at the wrong time. And here's what I want to show you guys here. Again, I got monitors all over. So this is where most people are buying into the markets, and your neighbors talking about it, your Uber drivers giving you crypto advice. By the way, that's an excellent contrarian indicator. If your taxi or Uber driver or hair salon or haircut person starts giving you financial advice, that we're near a market top. I remember back in 2008, I had a taxi driver giving me stock advice, and I thought maybe we're near the top, and sure enough. So in this the cycle, though, euphoria and thrill usually is followed by this downturn. The point of maximum financial risk is right here, and then people go through anxiety, denial, fear. Maybe you've experienced some of these: depression, desperation, panic. Capitulation will show you, if you're not familiar, that's just when people are selling at any cost, or usually there's a wave of liquidations fueled by stop losses hitting liquidations, and then more stop losses, and it's just a huge fast drop down, followed by despondency and depression. Now, this is the point where most people don't even want to think about it. They've lost money, they don't want to tell their spouse, they just put it away, and it's too painful to look at. And this is really the point of maximum opportunity. So as you can see right in here, followed by the whole cycle repeats: hope, relief, optimism. So clearly this is the best place to get in if you can catch it on an upswing. And so with that, let's see. Why don't I show you something else here on this weekly chart, because there are some other things to look at. This is an RSI. Again, nothing super fancy. We've been in a downtrend for some time, and it's not clear. We had hit an all-time low. I think, Mark, your comments, first recession. It's we could certainly come back and retest this. So nothing clear to see there. The stochastics RSI has some room to come down here and bounce. We could see a little bit of a bounce here in the short term, but I think probably be pretty quiet going into December. This is one of our proprietary indicators, not really telling us much with that. And so the only other thing I might share is this indicator there, which it's kind of a lot to show people, but I'm going to give you a glimpse of this thing. This is something we accidentally discovered and nearly threw it away. But in terms of what it's able to do, you see this green arrow all the way back down here and this red arrow here. this was auto printed, and so this would have been able to get us out before the big crash, the COVID crash, and then back in right here at the bottom. So now these red arrows here would have been invalidated based on some other criteria, but it also called the bottom of the market last summer to the day in the week, followed by these red arrows here at the top, kind of basically saying get out. This is a weekly chart.
I,
So
I think the key people should be aware of is these are very, very helpful when you use not just one of the things that Brett's talking about, but you put them all together. Like if one symbol over here says it's down, and then you go and look at one of the other things that he's talked about, and then another thing, and then they're all pointing the same, then you can go, well, this is not a bad time to DCA, rather than just look at one signal in of itself.
Yeah, and you know, to be fair, everybody has things they like. That would be my recommendation: is have a handful of things that you like, that you're comfortable with, and not get intimidated or bogged down by things. And so, you know, I do use Fibonacci's and Ichimoku's and other things, but generally that's kind of my confirming indicator. And so it's one of the things that we've just, these two simple indicators tell us so much that we feel that we have an edge. And so anyway, so it's something that we look at and prefer simplicity as well, because this arrow here that confirmed right on this little red dot was the top of the market, and again over here. So anyway, but oops.
Do you
Is
ever
there anything else
do you ever look at it with regards to market, the money supply? Like in theory, the all-time high, if you take money supply into account, isn't exactly necessarily much higher than the last all-time high, even though it's 64k. It's like, yeah, but if you've got 3 times the money supply, technically you haven't gone up by that much, theoretically. And then when you're dialing it back, the money supply, it's, you know, it does affect things. But is that all sort of, like, in your opinion, like all sort of factored into all the graphs anyway, so it's not something to necessarily need to be looked at? Or is that something that you do also pay into account?
That's a good question. And so I've just jumped over to a daily chart, and on my surrogate for that is the total crypto market cap. I don't look at money supply because it's, for me, it falls into the category of one more thing I have to watch. And, you know, so it might be a good indicator, but here's the total market cap. And what's interesting here is we went right up to $3 trillion, and that was the all-time high. Came back down here, found some support at 1.5, bounced up to $2 trillion. That was the top. So these round numbers are often psychological levels and important. So back down, we dropped here back in the summer here, June, and pushed up right above to $1 trillion. Tried to get, briefly got above $1 trillion, couldn't stay above it. And then we've been going down ever since. And so, of course, this is a possibility here. We thought it might break, but that's been invalidated. The other thing that, this is another reason I think we do go down in the $500 to $600 billion before, or these would be ideal buy zones. And this is a previous kind of accumulation area. The other thing I do watch is, by the way, the USDT, you know, Bitcoin dominance, of course. Right now, money is not really flowing into Bitcoin. It's back into where typically alt season it would be. And Ethereum dominance, however, has been in a bit of an uptrend. I'm watching this closely because for all of 2018, 19, 20, ETH dominance, which just means the percentage of total money in crypto as a percentage in Bitcoin or Ethereum. And so what changes, you can see, as you can see here, is that it back in early 2020, the ETH dominance started going higher. And you can see, if I'll just turn off these moving averages, again, simple things, 21 and 50 moving average. But so I'm watching closely. Ethereum dominance is holding right here. And if we can get some kind of a bounce in the market, this may be a great place to load up and get back into Ethereum. And so it remains to be seen if that's true or not. So if it starts breaking down below that, then we know we're in for a bit of trouble. And then the other one I look at is USDT dominance, which is the percentage of total crypto that's kind of hanging out in stablecoin. And see, I hit that again. Yeah, so this has been in an uptrend. So as more money is going into stable coins, it means it's coming out of crypto, reason is, if you're new, people, if they have Bitcoin, Ethereum, and they sell it, generally they don't want to sell it for cash and fiat. They'll put it into a stable coin like
But
USDT.
it's on the sideline, ready to go in when things are more conducive.
Yeah. So this is interesting, and USDT sort of dropping down a bit. They're inversely related. So as we see USDT going down, generally that's money going back into crypto. Now I will say we have to be careful of this and watch closely because of the environment we're in. And I've heard some people suggest this, and I've recommended as a possibly good alternative is to, if you have a lot of money in crypto, to pull out, there's $250,000 in FDIC insurance. So we just don't know how this thing's going to play out. I would recommend having and spreading risk out among stable coins, whether it's USDT, Binance has a good one, BUNB. There's the Gemini, GUSD, and so the ones that are more stable, that are audited, but So what we could, the reason I mentioned that is we could see money coming out of the markets and into cash just for that FDIC insurance in the short term. So something to note. And then the DXY, of course, the dollar index is sort of inversely related. But certainly don't want anyone to be intimidated by all of this. Hopefully that answers the question. And
No, but I think it's important that people know that you're not guessing. You're not some wizard that just knows when the market's going up and down and you've got lucky. I think you make your own luck. So the reason you do very, very well, and the reason that your students do well, like listening to what you do, whether they apply the same advice themselves and make their own trades, or whether they just listen to your trading signals and go, okay, Brett's got a high recommendation about this, I'm going to do this. It's not luck, though. You've got a strategy, you're following it. And then when anything's invalidated, you go, okay, that's invalidated. But as long as you can win a lot more often than you lose, if you win 75%, maybe you win higher, I'm not sure. It's, you're in for a lot of profits. And that's where I guess the uninformed person, and that's where most of the people that lose money, I guess, come in, because they either get lucky because they bought and held from the bottom, or in the case of a lot of retail investors, they buy into the hype, they end up selling lower than they bought at, and they get burnt. So having someone like you being able to just keep a calm head and just explain how things work, I think that's very, very important. If you are serious about wanting to grow your money, then you have to at some point learn how it all works. Otherwise, you're almost better to stay out of the market altogether than to just throw it in willy-nilly, if that makes sense.
Yeah. And I think that the lure of being a day trader or a financial trader is dangerous. And so and early on in my career, I had done fairly well swing trading, and went and opened an account at a day trading shop across the river here. I'm in Washington, D.C. now, and I quickly turned $80,000 into six. That's the wrong direction. So that's a dangerous game. That's how I got into options.
You learned, though. That's why you learn not to do that with other people's money that are listening to you, though. I think that turned out to be a blessing in disguise, right?
For sure. Yeah. And the expensive lessons are the best ones. So fast forward, we started a company teaching investors how to trade options and Forex, and did that, taught thousands of people around the world. With crypto, though, it's the same thing. It is a highly manipulated market, especially in the short time frames. So the buy and hold long term is your better advantage, and the swing trading as well. Here's a chart of Ethereum that I'll just touch on. Now you see Ethereum hasn't been hurt as bad, and it's holding on this rising black line here, which again, I like moving averages, 300-week moving average. So what this tells me is the money is more going into Ethereum than Bitcoin. The recent merge was successful, and haven't been any big blowups. So I think as money comes back into these markets, we'll see, certainly Bitcoin at some point, but Ethereum seems like maybe the safer bet in the shorter term. I do like this candle here. It's if it closes any higher, could be a bullish engulfing. But on this indicator that we had here, again, the one I showed you before, your advantage as a swing trader is to buy at the low swing lows and sell toward the swing highs. And in this case, we had one down here, and then the big red arrow here was around, depending on where you got out, I'll take the midpoint, 687%. And so right now, the name of the game are base hits, but knowing when to get in and out is certainly helpful. And we're good at what we do, and sort of teach people these. We do have some live weekly classes that we do that maybe we'll talk about at some point. So, but beyond that, I just don't want anyone to be intimidated by a lot of this. And so
No,
here on
and I should also say, for most people, long term, you got to think about yourself 20 years from now, 10 years from now, 20 years from now. Don't just think about today. So with that in mind, even if all you ever put in to learn as an investment sense, even if all you ever put in is $1,000, just something small, like or $100, even just while you're learning, even if all you put in is a small amount, by having a little bit of skin in the game and learning this stuff, even if a big breakout or whatever can only take you from 1,000 to 2,000 or something like that, it's not the amount that you make today that's important. What's really important is that future you, 5 years from now, really, really gets this stuff so well, because you remember what it was like taking over 3 years. You turned 1,000 into 10,000 or into $20,000, and now you might go, you know what, I'm going to try and do that with 10,000 now that I'm an expert at this stuff, and I'll turn that into 100 or something. Like the knowledge is the real money. That's even worth more than the dollars that you get from implementing the advice in the short term.
That's such a good point. And a lot of some of my favorite patterns I learned 20 years ago when I was just learning, like the cup and handle pattern. And recently, if you guys are following Polygon Matic, it had an excellent kind of break out of the cup and handle. It's since pulled back, but it was such a tried and true indicator. And it's true in terms of the long haul, the long term. Recently was digging through some file cabinets here, and my father's old office here, found some old Netflix stock certificates that, had we held on to it, would be worth $35 million. This is before the recent tumble and everything, but and we didn't hold on to it. It was bought some real estate and did okay with that. But I think people are certainly now more than ever, once this bottom comes in, even if you were to invest today, I'm not suggesting you do that, but even if you were today and it came down another 50%, but ultimately goes back to where the trajectory is leading, it's life-changing money. And especially hold on to it. I mean, Amazon again was down 90% several times, whereas $10,000 invested early on would be worth millions now. So but there is an additional advantage of, if you can swing, not catch the exact bottom and tops, but kind of catch that middle 80%,
catch when it's also a really fair value. It's a fair value. It may go below the fair value at some point, but it is a fair price if you can catch that. Absolutely, that makes sense. Seems like Brett's been temporarily cut off. I just want to say a big thank you, Brett, though, for all your time on here. I might have to catch him off camera, but it's been absolutely amazing sharing all of this stuff with us today. I'm not sure how to get back to my screen showing when I'd given him the power of it, but hopefully that will happen. If not, sorry about Brett getting cut off there, but I will say thank you, Brett, for sharing everything that you did today on today's call. And I just want to say to everybody watching, I'm going to run a workshop with Brett. He's going to cover this stuff in a lot more step-by-step detail. He will open the doors at the end of that workshop to those that want to be part of his trading signals. He runs classes all the time, like every week and stuff like that. If people want to be part of that, I think it's a monthly membership or something, then that'll be offered at the end of that session. But as you see, he's very generous with his knowledge. He'll teach all of this stuff step by step on the workshop. He's got a free book that will be in the description below, but it might be a few more days before that comes out. but that's also going to be sharing how and why he managed to profit during the current downtrend and stuff to look out for in crypto right now. When that is ready, it'll be in the description below also. So anyway, I hope that you guys enjoyed this particular video. Please leave your comments below. I'm interested to hear what you have to say about this particular session. Do you want me to bring more guests on that talk about their crypto strategies? Let me know. Do you agree or disagree with some of the stuff that was said today? And please like the video, subscribe to the channel if you enjoy it. All right, that's it from me for this one, and I'll see you next time. Bye for now, everybody.